Hey everybody, welcome to the Tatiana Show. Today is January 12th, 2016. We're in a new year and we have a new guest today. I'm really excited to find out a little bit more about Bank to the Future from Simon Dixon. Hi Simon.
Hey, thanks for having me, Tatiana. Delighted to be here. How's your 2016 so far?
Very good. I think it's a really unusual year. I feel like things could get really intense and kind of scary, but for some reason, I feel pretty positive that maybe some of that will turn into good, if that makes sense. Maybe it'll wake some people up and bring some people together. I'm not really sure how it's going to turn out. How about you?
Anxious optimism.
Yes.
Yeah, fired up for 2016. 2015 was a really good year for us. A lot of change, a lot happened. We can discuss that today, but excited for 2016. Was happy to see Bitcoin end the year on a high in terms of people price speculating. It always brings new people into the industry and also allows people to get more value for their Bitcoin. So they always do a bit more with them.
Excellent. Very cool. So why don't you tell me a little bit about your background and where you're from and how you became interested in money. Obviously, it's a wonderful thing to have, but how I guess you got interested in Bitcoin as well.
Sure, yeah. Well, I'm actually an ex-banker, investment banker. I'm a banking geek. I've been obsessed with the subject of banking and money for probably a decade now, really. I left investment banking in 2006. That's right. This year will be my 10-year anniversary of leaving investment banking. And
Congratulations.
yeah, thank you. Yeah. Well, I got into the subject of money because I disagreed with a lot that I was taught in my academic career. I did a master's in economics, and I just didn't really buy some of the things that I was being taught in it. But I went down the education path, and that drove me into applying for graduate schemes and securing careers in banking, doing the thing I was meant to do. And a couple of years later, I was pretty miserable, really. I did 2 years in trading, which was really fun, but it became pretty unfulfilling just trying to scalp money out of the market and make the bank rich. Yeah, there's only so long you can do that without getting bored and for feeling a bit unfulfilled. So I moved over to corporate finance, which was helping companies go public on the London Stock Exchange. And that was really interesting to get some insights in business and what a successful business looks like and how the capital markets work. But again, I found myself drawing to something more fulfilling, and just one day decided to quit. Didn't really have much responsibility, didn't have a wife and kids at the time. And so just started on a business venture and started a qualification company, wrote this book called Bank to the Future, which was the first iteration of the phrase that we coined, Bank to the Future. And the first version of that was pre-Bitcoin, pre-crowdfunding, pre-Fintech, pre any of this stuff. And it was just purely about unsustainable things in banking that the governments need to change. But then the crisis came along, and a lot of what I was talking about in the book happened. And so I did another draft of it, and things like Bitcoin came along, and I was invited to the first ever Bitcoin conference by Amir Taki in Prague. You know, been hooked on the subject ever since, and really we'll go through it in a bit. But it was because Bitcoin solved the problems that I was trying to talk about how the government can solve in my book. And that was my first introduction, and then I've been obsessed with it. Done a few businesses, set up a fund, and some other cool stuff.
Okay, cool. So let me ask you something before we move on. You mentioned that you had learned about economics in school, and I don't have an economics background, although I do have a passion for it because of my activism and learning about Austrian economics. A good friend of mine is Bob Murphy. We just did a video series of kind of Economics 101 because I think a lot of the difficulties politically stem from people's misunderstanding of how economics works. So you went to school in Manchester, right?
That's right, yeah. I did a master's in economics at Manchester University.
So, what kind of economics do they teach? Is it Keynesian? Because, or is that a strictly United States kind of based economic theory?
No, you learn all the different theories, the classical versus the Keynesian, to a lesser extent, the Chicago schools of thought and the Austrian schools of thought. Um, but yeah, wasn't really satisfied by any of them. The main thing that I think economics has got a lot to answer for is, and the one that obsessed me and got me into Bitcoin, was the incorrect assumption that a bank is an intermediary between a borrower and a lender, which is the foundation for all economic theories, and they ignore the reality of how money is created when they model all the things that actually dictate all our monetary and fiscal policies across the world, and that's why they never get it right, because they're actually working off a broken model, which isn't accurately modeled, and that goes right back to the academic.
Can you explain that a little bit more? How is it broken? In what way?
Sure. So what we're taught in economics, I don't want to get too geeky, but
I
let's
want to
try and
hear.
put it in. Okay, all right. Well, what we're taught in economics is that a bank is an intermediary between a borrower and lender. What that means is that grandma somewhere in the world has got loads of excess savings, and she deposits them at a bank, and she's got a positive balance in her bank account. And then a student comes along and wants to go to university and therefore borrows money. And in theory, it looks like grandma's money is paying for the student, and the two balance each other, and the bank is an intermediary. Most people think that's how banking works, just like a piggy bank. Then you learn this theory called the multiplier effect, and the multiplier effect says that actually banks don't need to have all the reserves that they need to issue a loan, and what that means is that they actually lend out many times more than they have on deposit. And so that's kind of the multiplier effect. And economics has modeled this whole thing called the multiplier effect, which is how many times can you lend, and how does money flow through the economy based upon how much is on deposit. But when we looked really in depth into the banking system, it actually turned out there is no multiplier effect. It doesn't exist. Banks aren't intermediaries between borrowers and lenders. They are actually the creators of digital money, and that was what got me interested in Bitcoin, because many people might think this is the first digital currency. Well, it is the first digital currency with a sustainable monetary policy behind it. But prior to that, banks invented digital money. And the way that actually works in reality is that a bank has, when they get a banking license, they're granted by government, by regulators, the ability to create money at point of issuing a loan. So if you go to a bank and you say, I'd like a mortgage, and that mortgage is issued to you, there's no reserves, there's no deposit that matches it. There's no, they don't call your grandma and say, hey, we've got this guy that's got a mortgage and we'd like to lend it out to them. Are you okay with that? What they actually do is they create brand new money at point of issuing a loan. So all the money they're lending out was never there to lend in the first place, and it wasn't on deposit. It's a simple mathematical accounting trick. Now, this has got completely out of control and absurd, because now that's 97% of every penny in existence. So if you log into your online banking right now and you see a positive balance, in order for that positive balance to exist, somebody else had to borrow the money into existence. So for anyone that's got a positive balance, there's somebody that's in debt in equal measure. And the bank takes interest in between, which means that you need to continually create more debt and grow the debt cycle in order to have an economy, essentially. So this is the bit that's not actually modeled into economics, and you've got more forward-thinking economists like Steve Keen, who was at the university I went to, Kingston University, when I did my undergrad. And he's been fighting with economists to put the actual accurate model of money into our theories. But you get massive resistance. Why Bitcoin was so interested, and this is a long answer to a very quick question, but why Bitcoin was so interesting is that it actually made everyone question the assumptions behind how money is created. And that led to record levels of conversation about how money should be created. And I believe that a lot of that was driven. For example, we contacted the Bank of England. And this is how geeky I am. A not-for-profit that we were working with. They drafted actual legislation of how to take away banks' ability to create money. And one of the things they did is they rung up the Bank of England and said, "Do you have a manual of how money is created and how the Bank of England works?" And they said no. So they had to go through 600 papers. And it was only till Bitcoin came out that the Bank of England released the very first time a YouTube video confirming that this is how money is created and this is exactly how it's done. And so prior to that, we were ridiculed. We were really, before the crisis, we were wacky people. I was booed out of London School of Economics for what I said when I went and spoke there once. And now, this is actually becoming true and the foundation of the financial crisis, I believe. Anyway, I bet you shouldn't ask that now.
No, I think it's very interesting. I think that there's a misconception that economics isn't interesting, but it affects so many different people, and it also gives to those who seek a better understanding of the world, it gives them a very good key. It gives them a way to kind of peek inside. Is this method, I think that in America we refer to it as fractional reserve lending. Is that what you're referring to as well?
Yeah, so fractional reserve lending is also misleading because what the fractional reserve lending or model implies is that for every £10 on deposit, a bank can then go out and lend £9 and keep £1 on reserve. And then that £9 deposits into another bank and 10% is kept on reserve, which is £8.81 at this point or whatever. And this cycle continues until you have 10 times more money than the bank actually has on reserve. There is no reserve. The banks don't need a reserve. They can create money out of thin air to make assets that are providing the reserve. So now banks actually just lend out their appetite for risk, and that's it. You don't need a reserve. The reserve ratio went a long time ago. There's no hard cash needed. They just lend out whatever their appetite to receive that money back is. So essentially, money gets created based upon the appetite for bankers and their willingness to lend. And our entire economy is dependent upon bankers' appetite to lend. And so when they lose their appetite to lend because they think it's too risky, i.e. they've got everyone in the world to take on a mortgage, then what they do is they invent new products that allow them to lend more. And that's what the foundation of the crisis was, which is the subprime market. They said, well, what if we could lend to people that can't afford to repay the mortgage? They are able to use the asset of a property in order to get the mortgage. And then people will come along and put false valuations on this. And then what we'll do is we'll sell the mortgage up, slice it and dice it into lots of different pieces, create products that will sell to fund managers. And fund managers, what are they doing? They're pooling together your money, your insurance money, your pension money, the money that you're contributing. And all they've done is they've passed the risk from the bank onto the pensioner. And that's what the financial crisis was, because they found out we cannot grow our business model anymore unless we find new ways of lending money. But we're not willing to assume any of the risk anymore because we think these are bad loans. So we'll sell them on to fund managers, and fund managers are pooling together your money. So you're assuming the risk. And guess what? The government comes along and says, hey, we'll guarantee the whole system. What we'll do is if this goes wrong, if your loans go wrong, we'll use taxpayers' money to bail you out. And guess what? When we don't have enough tax money, what we'll then do is we'll get the central banks to come along, and they'll create money out of thin air, and they'll start creating new debt in the economy. So what you have essentially is you have the only way to grow our economy is to either get individuals in more debt, to get governments in more debt, to get companies in more debt, to get corporates in more debt. And that's why you always see boom bust. Boom bust is simply loads of money being created, boom. People can't repay that loan because the interest takes all their income. It confiscates assets away from poor people that took on those loans to rich people that control those loans. And you have a ginormous rich-poor divide where during the down cycle, all those people have to default on their loans. They repossess the property, the banks repossess, and they sell them on to rich people, and you just have a ginormous rich-poor divide. And with each business cycle, you get greater government debt, greater individual debt, greater corporate debt, until eventually there's no way of sustaining that debt. And that's kind of where we are today. We're at the end of a 400-year Ponzi scheme that was created as a joint venture between the Dutch central bank and the English central bank, and copied a few hundred years later by the Federal Reserve, and adopted all around the world, and it's based upon a policy that's not sustainable.
So how complicit, well, a couple questions. This is a really interesting topic. So how, are there other banks in the world that have not been sucked into this system? Because from what I understand, sometimes if somebody doesn't want to play ball, that's when the United States government or another world power kind of comes in and bullies them around, says that, oh, these are really terrible people, we got to get rid of them. But it's really that they don't want to play ball with the kind of financial scheme that's going on.
Yeah, so this is the exciting bit about today, and this is kind of what the beginning of the book Bank to the Future was about, the things that are problems and how the governments can solve them. But why I got really excited and did a couple more drafts and then started working with businesses is because we stopped having to wait for governments to make the legal changes that they're never going to make until the entire system collapses. And why Bitcoin was so interested is it came along and created an alternative model. So I think it's appropriate at this point to understand three things that Bitcoin does very differently to banking that make it such a different beast. And that is the three fundamental things about a bank that you need to know versus Bitcoin are as follows from the context of this discussion, is that if you get your wages and you deposit them at a bank, then the bank becomes the legal owner of your money. It's no longer your money. The bank gives you entitlement, and their business model relies upon allowing you to access your funds. But if they take excessive risk, the people in Cyprus discovered what happens when banks exercise the legal ownership of your money. The banks just said, it's our money, it's not your money anymore, you can't access it. And so when you deposit your money with a bank, they fully own it. Now with Bitcoin, you own your Bitcoins. You can deposit with them with a bank-like wallet where they look after them with you, but most of them you should be storing in cold wallets on your phone, on your hard drive, on your computer, whatever you're doing. You need to learn a little bit about how to secure them. But the reason you need to learn a bit how to secure them is because they're yours. With a bank, that's theirs. It's their money as soon as you deposit it. That's the first thing. The second thing is that banks spend money as they wish. They spend your money however they want. And the reason that we have these economic cycles and problems within our economy is because banks have found two business models which work very well for them. The first is that if the vehicle for making lots and lots of loans and in a very riskless way is mortgages and property. And so what they recognized a long time ago is that if you can get everyone to want to buy their own house, then we can create money out of thin air, issue a loan, take interest on all the money that was never ours in the first place. And if it all goes wrong and they default, then we can take that asset. And what this does is it continually pushes up property prices. Now, the side effect is that that's been property has become a ginormous vehicle for redistributing assets from those who are borrowing to those who are lending. And that's a big cycle that we've seen. That's why there's a ginormous rich poor divide. It's because of the property market. So because banks lend 40% of all their deposits and they create 40% of all their money by lending to property, you end up crowding people out from being able to buy their home because it continually increases prices, which is great if you own property, but if you don't, you're continually crowded out of the market where more of your income is spent on rent and mortgage. So with Bitcoin, and sorry, that was the second thing. The second business model is they realized financial speculation is a great business model, which is taking excessive risk with people's money and then having it guaranteed by government because the government have to guarantee the system because it's unsustainable. So 80% of all the money deposited at a bank, 40% goes to property, increasing property prices, creating a greater rich poor divide. The other 40% goes to financial speculation, which adds no value to the economy at all. Now, the 5 to 10% of loans goes to small to medium-sized enterprise and businesses, which the small to medium-sized enterprise is where all jobs are created in most economies. That's where the innovation happens. That's where entrepreneurialism thrives. That's where jobs are created in that sector. So that's what's good for the economy, but all of money and resources is being used for things that aren't good for the economy overall. So with Bitcoin, it's peer-to-peer. You spend it. There's no bank in the middle. I do have services. For example, I have a Bitcoin debit card, which allows me to exchange my Bitcoins for traditional currency when someone's not accepting Bitcoins. But apart from that, when I put it into a prepaid debit card, if I want to send Tatiana my Bitcoins, I can send them. There's no one in the middle. There's no, money's flowing in the direction of the people that own the money direct, rather than having an intermediary direct it in a different direction that's right for them. And the final thing is the monetary policy. So as we said already, when you borrow money, banks create money when you borrow it. So 97% of all money in the economy is created by a private bank. With Bitcoin, they created a really geeky but ingenious and elegant solution for how to create money, which is they said, we'll get these people to run computer equipment, and when they run these algorithms and codes, they actually verify and provide security to the network, and they make sure that everyone is spending money in the correct way and verifying and coding it. And as a reward for that, every 10 minutes we'll create some newly created Bitcoins, and we'll have a fixed supply that can never be manipulated, and we can see what the money supply is, regulated by math and code in a trustless network. And it was just something that no one could ever imagine. In my wildest dreams, I couldn't have come up with that, but it got created, it worked. And now what is so exciting, and where we started this question, was now we have bottom-up reforms, because now entrepreneurs can create anything on top of this almost $100 million investment that you would have had to make in order to build on top of the bank before. Now entrepreneurs can create financial services without banks, and that's one of the most exciting things. So now, rather than me having to knock on government's door and persuade them that you need to change the system, it's going to collapse when they're getting a really nice, healthy profit out of it. Entrepreneurs can just come along and create the alternative. So that's why I dedicated the most of my time now to working with entrepreneurs that are creating that alternative, so that when the system does collapse, which it will, as many people are aware that there are alternative systems which work outside of the system that's about to collapse right now. And it's why I love coming on shows like this and working with people like Tatiana, because you're getting new people involved in this. You're an artist, you're getting new artists involved. I think that's really important work. And I think, more and more people are going to need to know about this, because unfortunately, our financial system is really, really scarily dangerous. It's on the edge of implosion. And a lot of people are going to get hurt in that. And I want as many people to be aware that unfortunately we all need to become fund managers and speculators and traders and all this thing that no one really wants to become, but now we do need to, because we're in the system we're in today.
Well, I think that there will be ways of making that easier for people. It is pretty overwhelming to have to, even being responsible for your keys. I mean, that alone is unfortunately really hard for people. It seems like a stupid thing, but people are kind of flawed. But I think that the space is growing, and there are new developments all the time. I have so many questions. This one, I'm an artist, right, first and foremost. I came into Bitcoin because of an ideological pursuit. And when you tell me about this banking scam, basically, that's going on, and I try and juxtapose it with my desire to bring people together and be accepting of people from different backgrounds, I can't help but have a little bit of an internal battle, because there's these bankers, and one part of me wants to say, F the bankers, they're all horrible. And then the other part says, well, they are just people as part of the machine. But what would you say about their moral obligation to withdraw from that system? Because that's like saying, oh, my grandpa was a Nazi, but he was a nice Nazi, and he was just doing what he was told. Now, there's, of course, the other side of it, which is, well, even if one person withdraws, it doesn't make such a big impact. I mean, where do you think that the moral line happens with bankers? Do you think, because they can't all be horrible, but at the same time, if they're participating, they're complicit. So where do you kind of find some sort of peace with that?
Um, Firstly, I don't really see it as my position to judge people. I see it as my position to educate people. And my experience of people that work in banks, and certainly when I worked at a bank and the people that I worked with, zero understanding of how the system works. So I'll give you an example. I worked in corporate finance. My job was to find companies that wanted to go public and go through this rigorous process of getting them floated on the stock market and finding billions of investment for them. Um, that required 100 hours of concentration each week, working on a very specific area in banking that I had zero understanding or knowledge of what the greater system of how the bank actually works, or my contribution to whether there's any sustainability in that. Personal responsibility. I believe that people should, and I think one of the beauties of the financial crisis was that it gave everyone an opportunity to look at things again. When I was talking about these things before the crisis, no one would listen. I actually got chucked out of London School of Economics because they were offended by me talking about these things in there. I remember an interesting story. I remember Birkbeck University. It's a university in the UK. It's like one of the big London universities, and they were offended by the things I was talking about pre-crisis. And I remember when the Bank of England released the video explaining for the first time how money is created. I said, "Hey, I was talking about this a few years ago, and I've still got the tweet. I can find it in my archive." And Birkbeck University tweeted and said, "Hey, we've been teaching that all along." And it's what's that whole philosophy? They say first they mock you, then they laugh at you, then they accept it as self-evident and claim it as their own. That's exactly what happened. This is what the story of blockchain versus Bitcoin right now. You're seeing banks that completely ridiculed Bitcoin. It was something that they really paid no attention to. But now the Bank of England and Deloitte and all these so-called institutions that we need to listen to are coming along and listening to the Bitcoin community saying, hey, this blockchain stuff's got quite a lot to it. It could actually benefit consumers in quite a few ways. And so the banks come along and say, hey, we were for blockchain all along. We're reinventing the whole world of finance. We're doing blockchain. We don't like Bitcoin. We hate Bitcoin, even though Bitcoin's the most secure network, the one that works at scale, the one that makes them irrelevant and makes them more honest, and doesn't mean that they have to put everything in a central server that can be rigged and all those private blockchains that everyone's talking about at the moment. And so they reclaim the word blockchain. And I want people to know that actually, no, yes, blockchain is really interesting. Blockchain is going to solve a lot of problems, but actually, Bitcoin is by far and away the most superior blockchain out there. It's the only secure one that's working at scale. And it's the only one that's going to benefit consumers at the end of the day, because all that these private blockchains by banks are going to do is they're going to give banks a cheaper way of committing more crime through the same systems, but using a blockchain in order to make some cost savings so it's more profitable for them. And that is something I'm really not passionate about. And that would be the worst result would be if the end of this whole Bitcoin experiment, this largest socioeconomic, game-changing financial experiment, was that we created a cheaper way for banks to commit more crime. That would just be a real shame. And so I want to make sure that doesn't happen. But anyway, the original question, I've diverted away. Banks, my experience when I speak to bankers, they've got no idea of how the greater system works. Central bankers, they're pretty clued on. They know what's happening. CEO level bankers, they know exactly how the system works. They can read their balance sheet. They can see that. Have they ever looked at the greater, effects of their balance sheet beyond their bank? Most of them haven't. They don't really care. Their job is to drive return on investment for shareholders. And here's the way that we do it. Who are the shareholders? They're me and you. If you're contributing to a pension, if you're paying your insurance, You are the shareholders of the banks. You are the bank. So we're all in the system. Who's responsible? Well, I actually think the banks only do what the government allow them to do, and the regulators create regulations by which they facilitate the process and make it legal. And one of the biggest challenges we've had setting our Bank to the Future is we had to spend, the company now, not the book, we had to spend 3 years just dealing with regulators that were protecting some really entrenched interests, and on the surface pretending that they want to support innovation, but in the application of their policies, really creating entrenched monopolies, and being very, very destructive towards financial innovation. And these are the so-called protectors of consumers. I'm all for consumer protection. There's lots of problems with Bitcoin. There's lots of scams out there. There's lots of bad players. But protecting monopoly is definitely not consumer protection. And half of the policies that regulators have are definitely not consumer protection. They're other agendas.
Very, very interesting. So let's switch gears to Bank to the Future for people that don't understand. Can you give me an overview, and do you have to contribute with just Bitcoin, or how does that work?
No, so Bank to the Future is an online investment platform. It's global, so therefore we can only deal with a certain type of investor. But what we've got is the largest community in the world of fintech investors that are looking to invest in financial innovation, and entrepreneurs can come along to our platform, and they can apply for finance. If we think that they pass all our due diligence, and it's a pretty extensive process, but if they're someone that we think is building something that, one, disrupts banking, makes banks less significant, and two, has a great team that are likely to create a large company, then our professional investors can invest in those companies, and we've got a source of funding that allows those companies to raise finance if they're disrupting finance, in a safe way, really. Because one of the biggest challenges, what's the challenge at the moment with the Bitcoin industry? At the moment, since its inception, there's been about $1 billion of venture capital invested in the sector. Now, the venture capital sector, they're not missionaries. They're not here to make a big difference in banking. What they're here to do is, in the next 3 to 5 years, invest in a company and make sure they can sell it for 10 times greater by selling it to a bank. And the banks are going to acquire all these Bitcoin companies that have venture capital funding for a couple of reasons. One, to either eliminate the competition, which is the Google strategy, which is acquire to eliminate if you don't like your competition. Or secondly, it's take it in and implement it into your processes and centralize it. And that's what all these companies that are securing venture capital are going to need to do. Now, what I'm more passionate about is providing an online platform like Bank to the Future, where we've got 16,500 professional investors, want to see Bitcoin happen, want to see blockchain happen, want to see Fintech have a big impact for the better. But also, they're looking to do return on investment through financial innovation. So I think the investors that have invested through our platform, they're investing in a lot of the companies and opportunities, they're more likely to have a return on investment by the shares being tokenized in some way and exiting onto some blockchain stock market. And these are geeky terms as well, but what we've created is a platform whereby all this innovation can be funded. And we launched in 2015, and from April 2015 to December 2015, we had $45 million invested through the platform in companies. Now, to me, that's $45 million that's going to be used in order to create some kind of sustainability and new services, open up new markets outside of the banking sector. And it's also 5% of the venture capital market in our first year. So the entire 6 years, $1 billion was invested in Bitcoin companies. In less than a year, 45 million or thereabouts was invested through Bank to the Future. 5% of the venture capital market. I'm really excited by what we can do in 2016 by taking more of the companies, and rather than having to go to venture capital, They can come to a platform like ours, and rather than raising $250,000, they can raise 1 million, they can raise 5 million, they can raise 10 million. And in 2017, I'd like to see them exiting onto a blockchain stock market, and I'd like to see every single area of finance reinvented. Now that we have this invention called Bitcoin, we have these new products that anyone can build upon and build financial services, and that is, to me, such a more exciting mission than trying to persuade governments to change laws where they're getting very large backhanders out of the system.
Why do you think that investors like to use Bank to the Future? Do you think that they're aware of their potential, do you think that they are aware of investing through this method versus the other method that you described before that, the more traditional VC route? Or
No,
is it just that they
so
can do it from their house and they're just in their PJs?
yeah, so mostly what we do is we make everything direct again. So the way the venture capital market works is essentially you contribute to your pension fund manager then does a load of stuff with it, and a very tiny percentage of it is then given to the venture capitalist. And the venture capitalist then pulls together all this institutional money and then starts investing in companies. And there's like 10 layers on top of that between the person that's contributing to their pension versus the business that's receiving the venture capital funding. What we've come along and done is said, if you're a professional investor, if you're a high net worth investor, we've got all these, 3 years of defining all the qualifying investors all around the world, and our platform does a real easy compliance process of knowing if you're qualifying. But if you can legally invest, and we've got to perform within financial regulations, then you can go direct and invest in these companies through banktothefuture.com. So a lot of the companies on our platform, they would never have been able to get the opportunity to invest in these companies if it wasn't for our platform. Now, we also allow very easy. So, for example, one of the products that we're really passionate about that we launched in December, we've raised approximately, I think we're on $630,000 now, is a fellow Bitcoin advocate and journalist called Max Kaiser. Him and myself, we set up a fund called Bitcoin Capital. What we wanted to do is create that venture capital fund, but have it audited by the blockchain, change the risk profile, change the way we do it. So we invested 1/3 of our funds in Bitcoin mining. Now, what that means is that we can give, because we've got really efficient mining rigs in Iceland that we've been running for a long time, we can now pay our investors dividends every single day, automated through Bitcoin. Now, if I said to you, we can pay you dividends every day, that sounds like a Ponzi scheme, and it's hard to persuade people that these things are possible. But now, because why wait a year if you can automate it, if you can pay autopilot, and you can pay every single day because Bitcoin's programmable money. And so what we've done is we've created a way for someone to come along, invest a few $1,000s, accumulate Bitcoins, get exposure to this asset class through either venture capital, through our fund, or investing direct on their own through our platform. And we believe at the moment we're the only place that's also, not. There's lots of alternatives in this sector, where you have to go through like decentralized platforms, and people can create these assets, and lots of, it's a bit of a wild west. But what we've done is we've made it, they can invest either in Bitcoin or any currency or fiat. We've automated compliance. We spent years on the regulatory process. We're registered with a regulator so that we have to comply to the regulations that do protect consumers, but we're also using the best of the fact that now regulations can be done through blockchains and various other things which perform better than human regulators. So I think people are using us, one, because we've got products that they wouldn't get exposure to in any other way, and two, we've spent a lot of time building the platform. 4 years we've been building it to have a beautiful user experience that's easy for people to understand and use, and they can just get involved in this sector one step at a time, start receiving their Bitcoins, invest in the way they're used to, have a forum of community members that can tell them which wallet to set up, which ones are good, which ones are bad. And I'm really excited that this actually has been working now, because it was a real 3-year slog, and then in 2015 it just exploded. And in 2016, I'm really excited about where we can take this. I think we can have a material impact in the future of finance. And I didn't want, one of the other goals, a selfish, pure self-interest goal, was I actually wanted exposure to everything that was happening in the alternative finance sector. And Bank to the Future, we couldn't build it ourselves, so we created a platform where I could invest in all the companies that I wanted to invest in, and other people could co-invest alongside us. And now, every area that's being reinvented through Bitcoin, blockchain, alternative finance, we're investing in. So people are investing on the same terms as us. It's all things that I'd invest in, and other people professional investors would invest in. So I just wanted a portfolio of everything that's going to explode, because I believe that this market is going to take a significant percentage of the multi-trillion-dollar banking traditional financial sector, and when this system implodes or collapses, I think people are going to need ways to get exposure to these asset classes. And so, it was purely self-interest for that part as well.
So when people participate on Bank to the Future, what are some of the criteria that you look for with a company that wants, well, actually, I guess you have a certain amount of compliance from the investor side, but also in terms of companies that are thinking, well, maybe I want to raise through Bank to the Future.
Mm-hmm.
And how does one ensure a successful campaign?
There's a couple of points to that. So the first thing is that we, unfortunately, I'd love to say, Bank to the Future is a place where anyone can come along and raise finance, but it's actually not. We've got a less than 1% acceptance rates of people that apply to people that to the ones that get on. The reason for that is because if we just allow any opportunity to come on, and investors invest in a load of stuff that we wouldn't have invested in, or some other people, we get it wrong. I'm not saying we're right all the time, but then we soon have no customers, because if investors lose money, they're not going to come back and invest again. And our whole business model is reliant upon investors investing again, because we want to build relationships with people online that are looking to build a portfolio. So we have to put them through a pretty extensive due diligence process. We make sure that companies are set up in the correct way. We have all the documentation. We legally verify everything they say. So if someone says on our platform we have 10,000 users, then they have to prove to us and show evidence that they do have 10,000 users. If someone says, we will be reinventing banking, that's an unfair statement that might mislead investors. So we have to spend time with them crafting it in a way where, if we achieve our goals and we achieve these milestones, then we think we can have this amount of impact in banking. So we have to make sure that entrepreneurs are very ambitious people, otherwise they wouldn't be entrepreneurs. And they have to be really excited about their business, but that can often lead to misleading statements that don't happen, simply because if you didn't have that level of belief in your business, you wouldn't put up with all the shit that a business puts through people through. Running a business is hard. It's not easy. So we need teams of people. We need products that solve real problems. And we like some kind of traction. Now, however, saying that, if you're not that yet, we have a partnership with other platforms. So, we talked about Max. Max runs a platform called StartJoin. Now, StartJoin is a rewards-based crowdfunding platform. Anyone can participate. Anyone can contribute. They can give a quid, 10 quid. It's like Kickstarter for crypto. So we can test them. We can send them to StartJoin and say, look, it's a little bit early stage. Why don't you try and raise 5-10 grand, build your product, get some customers, and then come back and reapply once you've done that. And that's a pretty good filtering mechanism, because some people just don't get through that. And to make a crowdfunding campaign, we're an online investment platform. StartJoin is a crowdfunding site. To make a crowdfunding campaign work, you have to have pretty aggressive marketing skills. You need to be, you need to have a good team. You need to have a product that satisfies a need. And if the crowd are willing to back it to the level, then it shows a lot of the tenacity that someone needs to prove that this isn't just a passing idea. This is something they're really committed to. So we use other crowdfunding platforms as testing grounds to try and to try and graduate towards the online investment platform to the point where, our investors are comfortable to invest in those companies. And we have a really high success rate. But sometimes the investors on our platform, they're pretty savvy, but they also sometimes let good opportunities go. So we've had some really great companies that didn't get funded. I mean, our success rates are really high, about 80% do, but the 20% are real unfortunate because they were businesses that really wanted to get funded, really wanted to invest in, but our online investors didn't quite raise the exact amount needed to make it happen. So it's a real shame when that happens.
Is there a potential disadvantage for having so many investors in one product if somebody wants to go out and raise more money later? Because there's a lot of due diligence that needs to happen by future investors of previous investors. And if there's 5,000 guys that invested, that's a lot of due diligence that needs to happen. So how is that issue addressed?
And this is one of the benefits of our platform. So what we do is, if a company raises finance through our platform, they only get one investor. And that investor is a special entity that we set up, and we act as a nominee, and we have an investment agreement with all the investors where we represent the investor's view and we pull together their votes. So rather than them being an individual investor that invested $5,000 in a company and don't have much voting rights, they can pool their voting rights with all the other investors through our platform. We have an investment agreement with those investors, and then the company only gets one investor. So we represent the investors' views, and we act as a pass-through mechanism so that they will only get one investor. And you're exactly right. There are platforms out there that give you 5,000 new investors or 600 new investors, which is absolute admin nightmare. I can't imagine having a company run that way, and it will stop you raising further funding. And I think it's a really irresponsible way of doing it, and that's why we spent so long creating a structure whereby we can automate a lot of the process of creating these vehicles, and then you get the entrepreneur gets the best of both worlds. They get one investor, but then they also get the benefit of having a forum where they can communicate in a private fashion with all the investors, and they can add inputs and they can beta test their products, and they can add benefits to the company, but without having to get them all to sign this and that. And yeah, we can. That's what our platform does. That's the technology behind it.
Another advantage, I've been just learning more about, I went to music school, so they don't teach us a lot of this stuff, but one of the advantages for taking on an investor is not just the money, but also the relationships that investor can build. Is that something that Bank to the Future can also offer? Because say a company needs to get in touch with, or get some guidance in a certain way. Is that something that would be able to be provided by Bank to the Future, or is that not something that you guys are focusing on?
Well, it's something that does happen through Bank to the Future, but it's not a service or promise that we offer. The reason being is because the investors actually do that for us. So, we have companies that have raised finance through Bank to the Future, worked together, built joint ventures and products, because we're niche to one sector. So that's what's different about us. We just do financial innovation. So, we're experts in this sector. We know a scam. We know a good opportunity from bad opportunity. We know the good teams. We know the bad teams. We know the good investors, and we co-invest with the good investors, the ones that can spot all this. But yes, certainly, the 16,500 odd investors on our platform right now, they invest through banktothefuture.com. One, because they probably see a great return on investment if this opportunity grows to be in a high-risk, high-return environment, and they can afford to make those speculations. And if this goes to be as big as we believe it will be, then it will be a very lucrative investment for them. Obviously, if it goes wrong, then they lose all their money. So it's a high-risk, high-return asset class. This isn't the thing you sell your mortgage to invest in. This is money that you want to speculate to be worth a lot more, but you can also afford to lose. But all those investors have a massive self-interest in making sure that they're up to date. So, they're always posting articles. They're always posting what new competitors are up to. They're always posting in the private forums, new joint ventures, introduction to contacts, new marketing. They're running campaigns and they're saying, please tweet this at this time, and everyone's tweeting their campaigns. So you end up with a self-interested army of people that all want to support the business. And they're also, most of them, not all of them, because we have lots of investors that are wealthy people in other sectors, but new to this sector and don't necessarily have the knowledge. But I would say a good half of our investment community are people that understand this sector and can add value to the company.
Are they only businesses that are fintech oriented, or do you do anything different than that kind of space? And what would you consider that type to be?
Yeah, so our niche is, in order to qualify to apply, you have to be in financial innovation and technology. So we even niche a little bit further. With fintech, there's two types of fintech. There's fintech that's building technology to sell to banks, and there's fintech that's building technology that makes banks less significant. We're interested in the technology that makes banks less significant and other financial players less significant. So we're looking for disruptive financial innovation, and that's all we do. And we don't have any plans of expanding out of that vertical. We're not looking to get hundreds of investment opportunities all at the same time on the platform. We're looking to actually align our interests, because what we're looking to do is invest in those companies as well. And if we can support those companies to exit and grow, that's our business model, as well as the 5% that we get on the funds raised. But our biggest goal is to actually be invested in those companies, get those companies as large as they can, and do it in a way which is truly disruptive to banking, rather than them being gobbled up by the latest bank acquisition strategies to eliminate the competition.
What is the threshold for somebody to be an investor in Bank to the Future, obviously as an investor in one of the companies that you guys are helping raise money for? What is the minimum buy-in, I guess?
Okay, yeah. So firstly, the definition of who can invest depends on which country they're from, because we had to read over 50 financial services acts to create all the different and filter through. And it was a very long process. But the minimum investment tends to be $1,000. So we found that as a good number. But it's multi-currency. So some people are raising funds in pounds, others are raising in dollars, others are raising in euros. We integrate with lots of different currencies, and depending on where you're sat as an investor or you visit the platform, it will show everything in the currency based upon where you are. So it's built to live on the internet and be a global platform.
Okay. What else? I feel like we've gotten a lot of really, really good information to people. I really enjoyed this a lot. So this show is hosted on Liberty.me, but I also broadcast the audio of it to Let's Talk Bitcoin, which I'm sure that you're familiar with. And we usually have to have a magic word. So do you want to set a magic word? Because it's sort of a secret thing to get people to pay attention, and they can earn LTV coin.
Tell me more. What does the magic word do?
It allows, okay, so just like Tatiana coin,
Yeah.
LTB has a token system, and what they're doing is that they reward listeners for listening, and then they have to give a magic word, and then they get LTB coin as a prize, I guess.
Okay.
So what do you think would be it could be a phrase, it doesn't have to be a word.
Can it be Bank to the Future? Or is that too promotional? Is that too
I think it's too promotional. I think it should be something a little bit more broad.
Okay.
I don't know why these messages to the future.
How about disrupt banks?
Disrupt banks. Yes, I like that. That's really, really good. So if people want to find out a little bit more about Bank to the Future, what other projects are you working on? So there's Start Join, and there's
Start Join is I'm an investor in Start Join. So if you look on my LinkedIn profile, I've got all the companies that I've invested in, because I tend to promote a lot of the companies I work with, and I want people to know that whether I'm invested in them. So Start Join is not my company, invested in the company. But some of the companies that we've been working with raise finance through Bank to the Future that I invested in. Factum, you're very familiar with, I'm sure. They're building blockchain as a service on top of Bitcoin. BitPay, who I'm really excited about. The only female-only board of directors that I know that's running a Bitcoin company, and they're doing payments in and out of Africa. And it's an extremely well-run company. Really, really delighted with the team and that we backed them. Uphold, who's doing free currency transactions between businesses, people that want to just exchange currencies for free, doing some disruption in the FX market. Shapeshift, you might be familiar with. There's a lot of them. So you can see that we list all the companies that we've raised finance for on the investor page at banktothefuture.com. Yeah, people can check out the opportunities there. And if they want to learn a bit more about some of the other projects I'm involved with outside of business, then I try to keep my LinkedIn up to date with all the things I'm involved with.
Yeah, I had seen it earlier this morning, and it was the longest LinkedIn in the world. There was just boom, boom, boom. You'd think that you were 80 years old, but that's very, very exciting. Well, thank you very much for joining me today. If people want to find out more about Simon's project, go to banktothefuture.com, and you guys are on Twitter. We'll be posting this at the LTB show probably later today or tomorrow, so that'll be great. And then the Liberty.me folks can also get involved. Any final words to our audience?
Yeah, thanks a lot for having me, Tatiana. I really look forward in 2016 to seeing some of the projects that you're working on and your coins and how you've been combining the art industry with crypto. I think everyone, the beauty of crypto is that it gives everyone to contribute in their unique way in their areas. And, if you can combine the arts and crypto, I think it's a really valuable thing. And I really look forward to seeing what you can do with that.
Well, I'll talk to you about that offline because I actually wanted to pick your brain and get a little bit of thoughts on that. But thanks everybody for listening. This was a great show. I'll be back next week. I don't remember who our guest is next week, but excuse me. Please check out cryptomediahub.com or tatianamrose.com to see what I'm doing. We'll see you next week, and thanks very much.